All right, everybody. Welcome back to another episode of Not Financial Advice. My name's Sean. Today is Tuesday, February 27th. We are just moments away from the close of the stock market. And I'm back for round two today to report on AutoZone. They beat earnings yesterday. And so I figured I should do a review of the stock and let you guys know what the fair value of it is based on my calculations. We're going to do a quick recap of how the portfolio ended the day, and then we're going to dissect AutoZone's shares right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, so I'll ask you guys to like the video and subscribe to the channel. And as the stock market is winding down for the trading day this Tuesday, my portfolio is bouncing around $72,925, which is the highest point that it's ever been at. Today, I saw a gain of 0.48%. That was good for $345 of profit today, and the market was up 0.21. So I more than 2x'd outperformed in the stock market. Topic of today's video: AutoZone beat earnings. It was either today or yesterday. They are in fact my top stock, gaining on the day. We can see here it's up 6.7%. What we can see here is that I own not enough of it. $439 of stock. I'm up about 21%, which is good for a cool $75. So I do own it, and the shares are going higher. Coulda, shoulda, woulda owned more, but that's all right. So I'm very happy with how everything's coming together here for myself. So let's get into the topic of today's video. Like I said, AutoZone, rocket ship performance over all time over the last year, up a respectable 18.7%, and just today closing out around 7% higher. I've prepared for you just some of the pros and cons in reference to an AutoZone investment. So this company does really well in recessions. People are less likely to buy a new car, more likely to maintain the one that they own. They certainly are the market leader. And they also have several thousand stores in the US, but around 700 or so in Mexico and less than 100 in Brazil. So they have some international growth happening with AutoZone. There is competition, which is not, I think, a huge impediment to AutoZone. But anytime you're looking at any sort of investment, anything to do with international conflict or macro global recession, too deep of a recession could lead this company to outperform relatively, but could still harm it. And then also, what impact might EVs have on AutoZone? I don't think it would be very great. I think that EVs still have windshield wipers and tires, and I think that we'll be with gas vehicles for at least the next 30 plus years. So I don't see that really as an impediment, but just thought I'd throw it out there for due diligence. So let's get into taking a look at AutoZone stock over here on Qualtrum. I'm not affiliated with them. I pay to use the software to look at stocks. I really like it. I'll leave a link for Qualtrum in the description below. As you can see here, AutoZone shares are trading higher after the company reported better than expected Q2 financial results. So let's look at the high level metrics. This is a $48 billion market cap company. That is a large cap. It has a forward PE of 18.5, a very healthy free cash flow yield of 3.65. And let's get into our sort of pros and cons on its balance sheet here. I'll ask you to like the video and subscribe to the channel, and let's take a look under the hood, as it were. So over the last 10 years, their revenue has grown by 6.7%, and that's accelerated in the last 5 to 9.2, and further accelerated in the last two-year stack to 9.24. So revenue growth for AutoZone is fantastic. I give it a thumbs up. Let's move to our next area here. So taking a look at free cash flow, we can see it's grown at 7.85% over the last 10 years, annualized, and then 6.25 over the last 5. So this is a pretty strong looking free cash flow chart. I'm giving it a check mark, a thumbs up. So let's see what's next. We also have earnings per share for AutoZone. That's a majestic looking chart. Earnings per share up higher 16.9% over 10 years, but also accelerating 22.1% over the last 5. And so this looks fantastic. AutoZone is killing it with earnings per share. And that will also be part of my valuation that I do here at the tail end, not only based on free cash flow, but also based on earnings. So I did find this can happen with any data provider, but there was an issue with the debt here from Qualtrim. So I pulled that number from Yahoo Finance today. It looks more similar to this. And so I'm going to give them a thumbs down for cash and debt. Um, I'm sure that they have a decent credit rating, although. So let's take a look at shares outstanding. They're going down a lot aggressively. I'm giving it a big check mark for share buybacks. We're also looking at ratios. Let's start here. So returns on capital employed are super, super high, about 45%. That's really awesome. This really drives stock market returns. So you always want to look at this. And then profit margin. Yeah, I could have kept that up. It's not bad. It's fantastic for retail and it's growing around 13 to 15%. That's nuts. I really like it. And lastly, two more things. Let's look at the historical 10-year. They're sort of trading at a sort of within a normal range for valuation. So I'm gonna whatever that rating is, that's what it gets there. And then looking at expenses, they are going up and to the right, so that will be a thumbs down. Okay, I think that gives us the overview of everything that we need to look at for AutoZone over here on Qualtrim. Let's get over here and take a look at what these shares are worth. They're currently selling for 2,000, let's say $2,950 to make things easy. So $2,950 share. Let's get over here and look at our free cash flow DCF first. Okay, so taking a look at our free cash flow valuation, this is the average of the free cash flow over the last 5 years. This is the amount of cash they have on hand. This is what I was able to find as far as long-term debt from Yahoo Finance. Shares outstanding is this number. Growth rate on the cash flow, I'm projecting conservatively at 5.75% for the next 10 years, dropping down to 3% for every year after, which is the just essentially the GDP discount rate, aka the required rate of return per year, 10%. $2,950 stock value based on free cash flow, 1,754. So on free cash flow, it's showing that AutoZone is overvalued. Let's make sure that we have a complete picture and let's do our valuation based on earnings per share. Okay, so now we're doing our valuation based on earnings per share. The earnings per share over the last 4 quarters was $165.22. AutoZone has a median historical PE of 17.9 from what I could find. I have a conservative projected growth rate on earnings per share of 13% moving forward. 0 for both of these numbers. Required rate of return discount rate of 10%. $2,950 stock. Value based on earnings per share multiple, 3,383. And so when we take both of those numbers together, the free cash flow number and the earnings per share number, what we arrive at is a fair value estimate on AutoZone's $2,950 shares at $2,568.50. So I'm showing this as slightly overpriced, overvalued, but this is an absolutely tremendous defensive, strong company, a great investment, and I personally would buy more at this level. So thanks a lot for tuning in. If there's any other stocks you'd like for me to review, leave that ticker symbol in the comment below. Until next time, I'm Sean, and I'll see you on the next one.